in the webinar. And everybody is, with it being a webinar, everybody is muted and nobody is seen on the screen besides our presenter and myself, Michelle, from the Temecula Valley Chamber of Commerce. So we will, I think, go ahead and get started. Thank you again for joining us for one of our Wednesday webinar series. Today is why is now the time to invest in real estate? So we have with us Doug McAllister. Doug is a former Temecula Valley Chamber of Commerce Executive Board member. Doug served as Paradyme's Vice President from February 2019 to June 2019 when he was promoted to President. So prior to joining Paradyme, in February 2019, Mr. McAllister was the President and CEO of the McAllister Strategic Group. And with that, I'm going to head it over to our wonderful presenter today. And Doug, you can take it away.
Thank you very much. It's good to be with all of you. I don't know who's with us, but I'm guessing I know a bunch of you who are doing this today. And so I appreciate you all making the time in the middle of what is always a busy week. So I'm looking forward to having this discussion with you. And I thank the Chamber for making the opportunity available to me to present, as well as for all of you to hear this. My name is, for those of you who don't know, as you said, my name is Doug McAllister, and I've been involved in this region for a very long time. And what you're going to hear today, for those of you who do know me, you may not be aware of this side of me. I have been involved in this whole discussion of real estate investing and real estate discussion for decades here. And so this is kind of the natural conclusion of where I've been going in my career for years. And so what we want to talk about today is real estate investing. And the point I want to make, and if the only thing you hear today from me is that what I'm about to say, that I think you've heard it. And that's simply, when it comes to real estate investing, now is the time, this is the place, and you folks who are watching and listening to this are the people for this. We've already heard about me. Paradyme itself is a company that's a full service private equity firm. What I mean by that is it's a firm that raises money, in our case for real estate transactions, for projects. Either it's for on the equity side for folks who need that, or also on the debt side for construction loans and things. We also have our own real estate brokerage as well as mortgage. It's a soup to nuts concept that we have for providing services on the real estate side of things. It's beyond that. When I say soup to nuts, I mean, that's kind of where my old consulting firm comes in when it comes to that, because we're able to start with a developer when they just get the really cool idea that they want to do this project, and we start from there all the way through entitlement, all the way through permits, all the way through funding, all the way up to the other end of the project, which is the capital event. And we help with every bit of that to expedite it, move it forward. So and we do that for two reasons. Well, number one, because we want the project to work. Number two, with the security of our investors. But here's the point behind Paradyme. This company was started by our CEO, Ryan Garland, many years ago, but in the last, I would guess, this iteration we have right now is his whole focus was simply because he wanted to make the opportunity for real estate investing. He wanted to make that opportunity for everyone. You know, so much in the past it's been for the rich people, those who could afford to lose money, and therefore they are able and allowed to by the SEC and others to get involved in this kind of investment. But now with the laws that have changed and such, and the way we've set up Paradyme, anyone can be involved in real estate investing, and that is something that is near and dear to our hearts. We want to make this available for anyone. But when it comes to why I'm involved, it's kind of personal. Right, you see a picture there of my parents. Passed away, but my parents, there's a pastor, or his wife, that for over years and got involved many years ago. They were in Yuma, Arizona. Got involved with some folks that had this really great idea, and that really great idea was they're going to invest in some airport land in Tucson. And they did what many folks do, is because everyone was doing it, kind of the herd mentality, and people that they respected said, yeah, it's a good deal. And so they put 20 grand into that and lost every penny. And for them, you know, he's a pastor. That wasn't budget dust for them. That was a lot of money for them, for their retirement and for their buy food. I mean, that was important to them, and they lost every penny of that. And I hearken back to that with every investor that we have. Everybody we're talking to, including myself, is that for most folks, investing is not, this isn't budget dust for you. This is stuff this is a risk. This is something that you're concerned about, and that if you lost it, it would have an impact on your future, on your retirement, on your everydays. And so this whole in real estate investing discussion is personal. And what we're going to talk about today is why real estate is a good opportunity, but not just that it is an opportunity, but I guess I should say why it is. So we'll jump into that right now. Right now, this is nothing new to anyone that's watching and listening. The stock market is volatile. It's way up, it's way down. It always amazes me about what does that. Somebody hiccups, and the next thing you know is the stock market's down. Or the next day they hiccup again. Now the stock market is up, and it seems like it's almost that trivial that makes these ups and downs. And the slides you see before you just kind of as a summary, since World War II, what's been happening and how many corrections there have been. And one of the things that's been the philosophy about this is that folks have been saying that, well, in the stock market, what you need to do is just leave it. Just put it in there and leave it, because over 20 years, it's proven to always, you always make money. And I bought into that. And so I just try not to look when things were down, and then enjoyed it when things were up. But the problem with that concept that I have, and I'm not saying don't be in the stock market. I'm in the stock market. So please hear me on that. For those of you who are in the stock market, I'm not saying leave it. We're going to be talking about diversifying. But the problem I personally had when it came to the volatility of the stock market was that when it was high, it went low, and it went high again. That in between, that trough, that valley, was lost time. And so even if I got back in 6 months, if I got back in 4 months to where I was before I lost that money in the stock market, I have now lost 4 months of earning power to get back to where I was to be even. And that's a problem for me. And now they're even talking about, in many cases, I'm starting to see stories in the news and otherwise, where folks are starting to question that the 4% rule, that you need to have enough money in the bank to live on 4%. Now they're starting to question that. And then if you're dependent on that 4% in the stock market and the volatility, and the stories abound of folks who are retired, the stock market goes south, and what that does to them. So it's a problem. The experts are always predicting, there's different outcomes. One outcome is it's going to be awesome. Right now, where you have not just a V, but a super V. We've all heard that. Other outcome is that, no, it's going to be a double digit and double dip. Or another one is everything's wrong, and this is just weird, and it's going to figure it out. Or maybe there's a fourth outcome. Who knows? But all the pundits and the experts seem to be basically talking and reaffirming what I'm saying, is that for good or ill, there is volatility in the stock market. And the problem is that I believe we've just come to accept that. We've decided that that's the standard for investing. The Wall Street is the standard for investing. And so volatility is just something that we just have to accept, try to navigate a bit, but that's just the standard. And I'm not there. I'm reading a book right now by Dr. Henry Cloud, and maybe some of you have read it as well. It's called Necessary Endings. It's been, I believe it's probably, and I've recommended to everyone on the webinar, I believe it's probably one of the most dynamic books on corporate strategy, on decision making, on leadership, on anything having to do with decision making that you have to do, not just in your business life, but in your personal life. It's called Necessary Endings by Dr. Henry Cloud. And one of the things I got out of that book was, now trust me, I'm a guy, and those of you who know me know this, I don't quit. And I've always taken a lot of pride in that. I've always said, the only way you lose is if you quit. And stuff, and it's always forward, the ships are burned, you got to move forward, and so forth. And what this book taught me and reminded me of that, sometimes you got to quit. That doesn't mean you go backwards, but sometimes you got to question mediocrity. You got to look at the reality around you and say, does the reality around you is it such that it's going to convince you that that if you keep doing the same thing, it's going to get better? Is there hope? Or does that reality of a past performance tell you that perhaps reality is that there needs to be some changes, or you're going to be stuck with mediocrity at best? If you want to get towards better results, you got to deal with the question of mediocrity. And that's what we're going to question here, is that, do we have to accept the mantra? Do we have to accept the conventional wisdom that the only way to make money and develop a wealth strategy in life financially is the stock market? And I'm going to encourage you to question that. There's a necessary ending here. Alternative assets are, for the sake of a very simplistic definition, alternative assets are simply assets that are not in the stock market, period. It could be oil and gas. It could be real estate. It could be life settlements and insurance. It could be different asset classes within each of those, but they're alternative assets. And that is what we're talking about here. And you see in this chart here how there's growing interest in, when it comes to investing, in alternative assets. It was in 2000, there's about 5% of the folks who were focused on that. Now it's 25, and looking to see that grow over time. In my case, the alternative asset that Paradyme is focused on is real estate investing. Is taking money and putting it into real estate in one way, shape, or form. You look at this slide here to talk about dry powder. The dry powder is the money that folks are sitting on. They have it there for whatever reason. They've held on to it, and they're looking for some place to place that money. Right now, it's over $2 trillion globally. It's a lot of money out there folks are looking to place into alternative assets, and a large group of those folks are allocating their money towards real estate. And there's a reason for that, because they see what's going on with the stock market, and they're looking at real estate, and they're going, well, it's stable. You can actually touch it. You can have very high yields, and the value is strong. And so why real estate now is that those things are in existence. Some of the attributes here, and I won't read all of the slide, but on the offensive side, there's the capacity to take advantage of current pricing. There's existing exposure, but the post-COVID tailwinds, there's all kinds of stuff going on that has just roiled the market, and also for real estate, making more opportunity in place. It's a whole boots on the ground. I'm going to talk about that more under underwriting. Boots on the ground investment, and it's the management of that is very nuanced, but it also allows for a very hands-on approach to your investing, as opposed to, well, everybody else is doing it, so I'm going to try it too. On the defense side, the leverage is low, and the volatility is much less, especially if you do it right. And once again, I'll talk about with underwriting. You can have the long-term stuff, high occupancy. There's all kinds of things happening right now in the market that really, in many cases, seems to defy the logic, because folks are looking at what's going on with COVID and things, but at the same time, the market's doing so well when it comes to real estate. And if you're going to be disciplined about it, there's an opportunity to take real advantage by diversifying some of your investment dollars into real estate. Right now, you're looking at these sectors here in real estate. You got office, you got retail, you got industrial, you got housing, and then there's the debt side. For those of you who are new to this, the debt side basically is the construction loan. And we're looking at these numbers all moving toward green. Obviously, retail has been really hard hit during COVID. This has been a year I'm anxious to be done with. I'm sure you are too. Office has had an interesting experience because people working from home. Many of you right now are I'm in my office, but many of you right now are probably watching this from your home. Industrial, the same. Housing has been real interesting to see what's been going on there, especially in California. And then the debt side of things is off the charts. What's going on? People, new projects, because of all the money that can be thrown into that side of things. But right now, what we're watching in the industry very closely is the fact that all these colors are moving toward green in the real estate sector. It's been quite extraordinary to see what's happening there as folks are beginning to understand that there are alternatives to the stock market. But here's the key. And what I'm about to get into right now is the difference between what my parents did way back when, where they lost that money, and compared to what happens today in a very much more sophisticated environment of real estate investment. I call it the 5 A's of underwriting. Now, let me preface with this. I believe probably that most, if not all of you who are watching and listening today, are folks from this region, the Temecula region. And as such, if I don't know you, I can know you. We can meet face to face. There's a certain ability to have that face to face interpersonal interaction here that makes this whole discussion we're having right now less theoretical. Is that a good way to put it? It's less. It's not distant. You know, there's the accountability of face to face that's involved with this. And that's important anyway, but you need to understand how the decisions are made by Paradyme in particular about which projects to invest in, which, and take on, which projects not to invest in, and how we shepherd those things through. Because once again, your investment dollars are not budget dust. And we take great personal responsibility to see to it that we do the best we can to protect you as the investor. We want to earn the next investment and not just get the first one. So we call this, the way we do that, we call this the 5 A's of underwriting. The first one is accounting, which basically means we got to confirm the numbers. We run these numbers through every sieve we can think of to create performance, to understand what's the return going to be theoretically based on the numbers. What's the return going to be? What's your IRR? What term? Is it going to be 3 years, 5 years, 7 years, 1 year? What is this going to look like? And we want to run those numbers based on reality. So we accumulate, second part there, we will accumulate documents. We look at tax returns. We look at pro formas. We look at budgets down to how much the doorknobs are going to cost and how many of them they're going to need. We're looking at all of the information. And if the developer does not have the information, we will not do the deal. We just won't. We are not going to guess at this kind of thing. We're not going to do the herd mentality. Well, yeah, everybody likes this, so we're going to do it. No, we have to accumulate. I always tell folks, I'm going to know what color your underwear is before I'm done with my underwriting. I'm going to know everything about you, what your tax positions are, what your returns look like, the budgets. And we'll look at that and bring experts in to look at those performance, and we'll look at those plans. We had an example of a project that came to us not too long ago that was going to be in Texas. And so we were running through the numbers. We did the first part. Now we're starting to look at the documents, and now we start looking at the plans. And one of my folks on my staff looked at this and go, this won't work. Why? Why won't these numbers work? It says, well, they're using asphalt for the driveways. So I said, well, in this part of Texas, it's warm enough to where the driveways, the asphalt driveways will not last. They'll maybe last a couple of years, and you got to replace them, and that costs money. And so that won't work. They need a concrete driveways. They don't have the numbers for that. We ended up killing that deal because we found several things like that they hadn't thought of that we do as far as accumulating the documents and how all that works for the underwriting side of things. And that leads to the next thing, the actors. We look at the developer. We want to know, are they quality people? I mean, our deal flow is not a problem, but we want to find the best ones, the ones who've done it before, who have the experience, who are going to easily provide not just what we ask for, but more when it comes to the research that we want to do, where we're looking at the developer very hard. And then the next day is atmosphere. That's the market. Now, and we're looking at what is the market for the product that they are bringing to us. If it's office, if it's multifamily, if it's retail, if it's hospitality, whatever they brought to us, what's the market for that? And we take that to huge lengths. As many of you know, my background, I do having spent significant time on the political side of things, I'm able to reach out in ways that maybe others can't when it comes to identifying the market. For instance, we were looking at a project in Denver, and that project in Denver looked really awesome. It was in what's called a qualified opportunity zone. And we won't go into what that is. It's just a really cool thing for those who are trying to do 1031 exchanges. And it was like 2,000 units, plus a little commercial involved in that. And it looks like it was a really awesome project. We brought the developer in here. We spent days going over the stuff, and the developer was just all the reasons why this project was really, really awesome. And the entire time, there's something bothering me about it. And so I decided I was going to research the market. Part of that meant I needed to find out from boots on the ground what's really going on. And so after that meeting, picked up the phone and I called the mayor and the city manager of that city. And I said to them, here's what's going on. Here's the project. Do you know about it? Oh yeah, we know about it. And so they then began to give me an hour of why they did not like this project. And it all made sense to me. It was a commercially zoned project that makes the city money, and the gentleman that was the developer wanted a down zone to residential, which will not make the city money. And then he wasn't cooperating on all the things he was trying. They were asking him to do so they would grant that down zoning. He wouldn't cooperate on. So I got the phone knowing that project was going to be denied unanimously and such. Well, the developer was telling me, no, it's going to be approved unanimously. I've already talked to the mayor; they love it and everything else. Sure enough, it was denied unanimously. The atmosphere was not good for that project, and unfortunately, that developer went on to do a few other things that will probably land him in jail as a result of that project. My point here is that you have to understand when underwriting, if you do not want to have volatility in your investment, that's something you have to understand is what's the market look like. The other side of that is that you have the opportunity where some people will say, oh, that asset class won't fly, like hospitality. And so if we just take the conventional wisdom, say, okay, we're not going to take any deals like that. However, Paradyme, as you may or may not know, we are funding Europa Village, specifically the Vienza phase of Europa Village out here in the wine country with Dan Stevenson. And people say, well, why would you take on a hospitality thing? It's because we know the market. We know the wine country. We know how awesome it is, how it's an anomaly when it comes to all this stuff, that even when things are bad internationally, people still do the staycations. And we know Dan as a sponsor, who is the developer, you can't beat when it comes to the quality of developer there. We know all of those things that maybe other folks don't know. So we can't throw Europa out baby with the bathwater of hospitality. We know that is a unique situation and it's going to really kill it. And so that's why we're involved. So we know you have to know the atmosphere. And if you don't know the atmosphere, if you're not doing the numbers of the accounting, if you're not getting all the paperwork together, if you're not really looking hard into the backgrounds of the actors, the sponsors, and if you don't take that extra level of going to several levels deep into market and why it works and why it isn't, then it's a shot in the dark. It's just as volatile. It can be just as volatile as the stock market. But if you do those things, you can end up with really good opportunities where we cannot say it's a sure thing, but boy, it's awfully close as we mitigate and anticipate and mitigate any risk in these things, which leads to the last A. It's accountability. When it comes to investing in any kind of alternative asset, there has to be accountability involved in that. So let's just say you've decided, yeah, Doug, I want to invest in fund X, or I want to invest in Europa. I want to invest in that. And so, and you've written your check and you put the money in there and you're trusting us that we've done these first 4 A's. But what about A number 5? What happens, once we have now funded these projects, how do we know the money's going to be spent? And that's the question. Paradyme never leaves the project. We know we're in charge of all draw requests. There can't be a dime spent unless we approve it. We're watching how, we put cameras on sites, and literally when someone says the lumber's been delivered, we look at the camera virtually from our computers and see the lumber's being delivered. We're able to keep track so that we can make sure that everyone involved is held accountable for the dollars. And we can help keep those projects on track. So that is a, believe it or not, brief summary as to what makes the difference between volatility and security. It's the underwriting. If my parents had someone who would do these 5 things, the accounting, the accumulate, looking into the background of the actors and the atmosphere of the market, and stuck with the project going forward, they would not only would they not have, well, they probably wouldn't have invested in that product to begin with, but had they invested in it after having gone through that, they probably would not have not just lost their money, they probably would have done very, very well. And thankfully they did. In other investments after that, prior to their passing, they did very well, and so they were able to have a retirement and such. But had they done this for that one investment, they would have done well. And my encouragement to all of you who are watching and listening, regardless of what you decide to do, whether it's the stock market or whether it's an asset class that is in the alternative space, real estate, like I said, oil and gas, you name it, all those different things, or even if it's a venture capital play where you're invested in someone's business, make sure that either you're able to or whoever you're working with does these 5 things. If they don't, your risk is real. And let me say that again. Make sure that whoever you're investing with does these 5 things. They have the capability of doing the numbers, of accumulating the data, of doing backgrounds and understand who the sponsors are, the developers, of understanding in a very forensic level the atmosphere of the market, and then following up and just where you're on your own after you've done the investment and it's been funded. Now they're going to follow up, make sure your money is not wasted. Make sure that is happening. If that's happening, you are to the degree that's happening, to that same degree, you're increasing security and decreasing volatility. That's pretty much all I wanted to share with you today when it comes to the concept of alternative investing. My goal here wasn't so much, believe it or not, to talk so much about Paradyme. We'll have plenty of time to do that. Paradyme's the example. My goal here is to encourage all of you, if you have a financial advisor, I'm not that. We have a wealth strategist on staff, and he can help you with that. But if you already have one, talk to them about diversifying into the alternative assets. If they have any questions, send them to me, and I'll have a chat with them about that, and we'll coordinate those discussions. But my encouragement to you is, you're not stuck with mediocrity. You don't have to put up with the highs and lows of the stock market. You can find high security. In some cases, like one of our funds, you can find liquidity. You can find double-digit returns. You can create a whole retirement strategy in alternative investments, and we would encourage you to do that. And if you want to talk about that when it comes to real estate, then that is something I'm happy to have a chat with you about. So that's where I am on that. If there's any questions, you see the way to contact me there. If there's any questions, please feel free to reach out to me anytime. So I will turn the microphone back over.
Well, first of all, thank you so much, Doug. I just want to say personally, I honestly have most of me and my husband's investments are all in the stock market. And this was just so educational to learn about some really exciting things, and just your knowledge of, being able to, diversify some of our portfolios and retirement options going forward. And that was just exciting. So thank you personally for that. I do want to, open it up, make sure you guys, if you have any questions for Doug, that you go ahead and put that in our chat or into the Q&A. I do have a couple, Doug, that came in. So I was writing them down as they came in. So bear with me as I go to my notes. Okay, so one question that came in is, what would you consider is a good ROI on commercial real estate versus residential?
That is a kind of a loaded question, because it depends on the term, how quickly you want to get it back. Once again, it depends on the level of risk on that. It has been we tend to have our IRRs, internal rate of returns, tend to be around 18% there, whether it's commercial or residential. However, some of the residential stuff is, if it's a shorter term, longer term, that'll increase or decrease those numbers. But we're primarily focused on the double-digit returns. I've seen some as high as 30. When we see that, we dig deeper because we got to make sure it's real and such. But we tend to feel like if we can justify an 18 to 22% IRR, doing those 5 steps of underwriting, we're probably pretty secure.
Wow, that sounds really good. Great. Okay, another question. Someone asked, how could I invest in commercial real estate with no money? Is there an option to get loans? How would someone do that with no money?
Okay. First of all, don't recommend you get a loan in that sense. However, having said that, we have a whole service. A gentleman by the name of Harold Goldman here, who is he's a genius when it comes to showing people, yeah, you do have money. We have a lot of folks who are borrowing from their 401ks, and they're diversifying in that way out of the stock market and going through self-directed IRAs and taking that money. If they have life insurance policies, they have ways to borrow from that. So in that case, they can borrow, if you will. But what we have found is a lot of folks don't think they have money, and they really do. And so the answer to that question that I would give is that have a chat with Harold, and let him walk you through that. You might find out that you have opportunity. And we can set that up.
Great, that's a great option. Okay, is there any concern right now during the state of our COVID crisis to make such an investment going forward right now, just with so much uncertainty in our world?
Once again, I can't guarantee squat. Okay, that's why we're so focused on the underwriting, because there is a lot of negativity going on right now, and the uncertainty is real on that sense. But there is real opportunity. I mean, we kind of watch what the big boys are doing with the billionaires and the high net worth individuals and such, and they're putting their money in real estate for a reason. And the beauty of real estate is that regardless of what's going on in the market and out there, if it's up or it's down, there's ways to make money. There's ways to make very, very good money, high returns, and such. And we're seeing a lot of interest in that, even on the distressed asset side. We're really hoping that we don't end up in a situation in the country where everybody's losing their homes and things like they had before. But to the extent that happens, we have a program right now that we're working on the distressed asset side, where if we can help a business stay in business where we buy the building, but keep them in there and invest in the business too, try to keep them going solvent, because it works for everybody that way. But no matter what the market's doing, if you do the underwriting, you can find great opportunity. If you don't, all bets are off at that point. And that's my whole point, is encourage people to do their homework and let us help you with that.
Wonderful. Well, it sounds like you guys really do a lot of research too, and being well informed going forward. I like that. I think that's great. Okay, another question came in. With interest rates so low, as we all know, with housing and all that, people are, the housing market is crazy with interest rates so low. Is this also a main factor to consider making this type of investment for my portfolio? So with it being low, is this also affecting commercial side with the interest rates so low?
Well, it allows for folks to get into something cheaper, which increases their margin. And so in my view, once again, and we talk to the experts about this, how this works, but in my view, if I get into something cheaper, but I'm able to increase my margin, that just adds security to my investment. For my return, it becomes that much more secure. If you're looking at 10, 15, 20% to get into something as opposed to 2, your margin's much better to build the same project. So the part of the solidity, is that the right word? Solidity, the solid nature of investing in real estate at this point is reflected in the low interest rates, and such. And so there's this real opportunity there. We have seen, if you look at the market right now, what's going on with housing, what's going on with we're opening a debt fund right now. The debt fund is to make loans for construction, for building, and we're being inundating. Folks are building everywhere. So right now it seems like it's all coming into place. Having said that, when all of these different puzzle pieces come into place for this kind of market for real estate, you still got to weed out the real from the fake. And once again, that's where the 5 A's of underwriting come into place, and that's what we try to do.
Great. Yeah, I know if anyone watched the State of City address 2 weeks ago, there was all the information of so much development going on in the Temecula area. Just crazy amounts of residential commercial development going in. So
Well, and let me add to that. Those of you who've known me long enough, you've heard me say this, and I will continue to say this because I believe this with every shred of my being. This region, this 5-city region, is the future of Southern California. Beyond a doubt, in my mind, it is the future of Southern California. And so there's the opportunity. We specialize in this region, and we're looking to do some wonderful things here in this region. For that reason, we know this region and such, but this is where everybody's going to be coming. And so that's why you're seeing what's going on in Temecula, and you're going to see continue on throughout the Menifee and Lake Elsinore. This is a really exciting time for us here.
absolutely. I mean, I know the wine country, they're wanting it to be the next Napa. I mean, and it's projected with all the other wineries slotted to come in and all that development. It's 20 years from now, it's going to be amazing.
Trust me, we didn't take on Europa Village, and it's a $20 million raise. We didn't take that on because we like Dan Stevenson. I mean, there's data behind this that says this is a good investment.
Absolutely. So another question, a little bit similar to the other question I think I just asked you. It asked, with interest rates so low and the real estate is very high demand, so costs are a little higher on houses, is this affecting real estate, commercial real estate? Is that happening as well? Or is it staying pretty stable with the cost of getting in? So
the best way I know how to answer that, if I understand the correction correctly, is depends on what you're doing. If you're going to buy a house just to live in it, or you want to buy a house and you want to rent it out, there's a high cost to that and such. And so you got to run your numbers, and it still may work if you pay that price for the house and the numbers work on the rent. And so where it looks like it makes a good business sense, okay, fine. What we're finding is that the opportunities are for the fix and flips, for instance. People are going out and buying homes that need some work. They're able to buy them at a little bit of a discount and put some money into them and turn them around and either sell them or rent them out and make some really, really good money on that side of things. We see a lot of that. A lot of the stuff we have coming into our debt department is for fix and flip. So there's that opportunity as well. I'm not sure I answered the question, but the short answer is those higher prices, if anything, they're driving return for those who are invested into those things because they're getting more money when they sell them off.
Absolutely. Okay, another question. So people are seeing a lot of empty retail space coming available with so much online shopping happening. Mm-hmm. What do you see happening with that space? For example, they say in Lake Elsinore, there's a big empty, Vons used to be in a spot, that's gone. Walmart is about ready to move out, that's gone. What do you see happening with these spaces?
In the short term, they're going to be empty, in our view. We're not doing, generally speaking, we may find an exception here or there where we'll do retail, like we found the exception with hospitality, and we're doing with Dan's project. That's our underwriting discussion. But generally speaking, retail that's standalone, we're not invested in right now. We're holding off. That has been the hardest. If you remember one of the slides I had that had red on it, that's been probably one of the hardest hit asset classes within real estate. That will not last forever. I believe we are, as human beings, we like to see each other and get together. And at some point, it's going to be this great commingling again and such. But at that point, it will be a little bit different than it was in the past. But those days are coming to where we're going to see retail come back. But right now, we're not invested in real. Now, we'll do it in mixed use. If it's supported by other things, residential and everything else, we're looking at a couple projects like that right now. But by itself, we're not into.
Right, that makes sense. And with COVID as well, it's uncertain. So another question kind of actually piggybacks off two of them. What is the minimum to invest? And then I'm going to add on to that, if I'm able to free up 5 to 20,000 K, is that enough to be able to participate in this kind of investing?
Yes. Yes, it is. And and there's a couple of new funds that we're looking at doing that you can even do it with less. I'm talking to some of the cities in the region about funds that we can create to where the investors can be their citizens to invest in an amenity within the city. But yet the short answer is yes. If you got 20 grand or somewhere around that level, yes, we have a place for you.
Great. Well, that's even more exciting for those of us that would be beginners in this. It's feasible to get into this investing. That's
why Paradyme exists, because if you meet Ryan, he's not the typical Wall Street guy at all. He's That's an understatement. But his whole idea was he wanted people, everyone of every stripe, to be able to do this. And so that's how we're creating our fund, so we give people like opportunity to get involved.
Wonderful. Well, that I think actually leads in probably the last and final question that I see right now. But so is this like a real estate investment trust? So you're not necessarily buying a building, or are you buying like a mutual fund is the
Oh,
question.
no. When you invest into one of our funds or into one of our products, say you want to invest in Vienza, out in Europa Village and such, we have a fund set up for that. And that fund is what you invest into. And then you become part of that, a member of that fund's, what's LLC. And then that fund then takes that and invests into Vienza. And so you're investing into the fund. And in the case of the way Dan set things up, he considers you a part owner when you invest there. So we, as far as a real estate trust, we're looking to develop those going forward. I won't get into all that right now, but for the purposes of today, if you're someone who's interested in diversifying into alternatives and you're interested on the real estate side of things, pretty sure we can get you there. We had to have that conversation.
Wonderful. Well, again, Doug, I just think this has been such a very educational and exciting webinar. I know all of our participants hopefully feel the same. Just a reminder, guys, we have this all recorded. So if you'd like to rewatch this, you can watch it on our website. Probably within a week, we'll have that up. Share it with your friends, family, anyone that's interested. Doug, any closing words? And again, thank you so much for your time today. I'm going to leave it.
I sincerely appreciate you guys doing this. It's kind of fun being back involved with the Temecula Chamber. When I was on the executive board, then I ran for office and won. They kicked me off the board, and I mean, it was mutual. I couldn't be a city council member and on the Temecula side in Murrieta versus Temecula. But it's good to be a member of the chamber again, and looking forward to doing a whole lot more with you. I would finish up with those of you who are watching. I'm probably preaching to the choir right now, but I will encourage you, if you want to get the most out of your chamber, if you want to get the most out of your investment and to be a member of the chamber, you've got to be involved. You got to be involved at the events. You've got to come, as part of the committees. I was a part of the membership committee. That's how I came up to the ranks in the chamber as well. And if you want to really benefit from this membership, and I can guarantee you will. My business when those of you might remember Glass Blasters, where glass is a blast and we're etching to serve you. Those days back then, my business tripled just by joining the chamber. So I would encourage you all to do all of that. It's the best money and the best time you'll ever spend. Plus the friends you're going to make are awesome. But on top of that, I did neglect to say earlier with contact information, I had that up on the screen, but at the same time, probably the easiest way to get hold of me if you want to have a chat is look me up on LinkedIn. I'm very heavily involved in LinkedIn. You'll see me everywhere there. And look me up there and direct message me, and we'll have some conversations there too.
Well, again, thank you, Doug, so much for your time and all of your knowledge on this. And everybody that was on today, thanks for taking the time. And we will see you at another Wednesday webinar. And everyone have a great rest of your day.
Thank you all.
Thank you. Thanks, guys.